Well, if you ever wanted an example of a weekend trap, this weekend would be exactly it. We saw massive pumps and it's been incredibly choppy. Every single trader over the course of the weekend is now trapped in position. So we'll discuss what that means for you, what you should look to do next, where price action is most likely headed throughout this week, and what the US stock markets are going to do given the Moody's downgrade, right? So smash the like button, hit the bell notification, and subscribe to the channel, and we'll get straight into it. You can see the only coin up in the top 100 is Virtual. It's over there with 4.8%, but everything else is coming down pretty hard, especially on the hourly. We're seeing price come down right now as the market or before the market even opens, right? So I think what are we still in during the Asia session over here? So if you look at the USDT dominance, this is pretty much picture perfect in terms of just demonstrating the amount of chop and trappiness within the market. Have a look at that. Look at all those candles over there. Basically, whenever you see a candle this strong within the USDT dominance, you can see this is definite manipulation within the market. So I hope for your guys' sake that you weren't caught on the wrong sides of these trades, but this would have liquidated both longs and shorts. USDT dominance coming down, price action pumps towards the upside. Remember, trades inversely. USDT dominance goes all the way back towards the upside, basically engulfing that previous 4-hour candle, meaning the market dumps. For USDT dominance to engulf it pretty much yet again, market pumps, engulfs it towards the upside again, market dumps, and that's exactly where we're at right now. So coming into a pretty key area on the hourly time frame, I had marked out this fair value gap over here. So bulls will definitely be wanting to see that fair value gap in USDT dominance hold and some sort of a rejection take place. Otherwise, you may be going lower, right? So I would say that really you can summarize it as having to wait for the daily close, and I'll show you why in just a moment's time, right? So that choppy price action led to huge liquidations, 665 million, a little bit more from the long side than the short side. You can see over there, 449 million were longs liquidated, 215 were shorts liquidated, and the 24-hour short to long ratio is pretty balanced over here, right? So a lot of confusion in the market. Weeklies still look relatively strong. And in fact, if you switch to a line chart over here, well, this was actually the highest weekly candle close that we've ever seen for Bitcoin. And this is why it's so crazy when it comes to the current traps that you're seeing within the market, because you have the highest daily close ever, you have the highest weekly close ever. But when you go into the daily chart, as of right now, you're putting in a bearish engulfing candle at a recent high, right? Which is incredibly bearish sign, which is kind of catch-22 situation. Catch-22 because one, highest weekly close ever, highest daily close ever is indicative of trend continuation and a lot of strength within the market. But you have to take it into context and you have to prioritize. Well, you've come into a topping area over here with a bearish engulfing candle, which means you have to wait for the daily candle close. Now, if the daily closes like this as a bearish engulfing candle whilst coming up to those highs, well, you may be in for a little bit more downside, right? The first area of interest is going to be coming in over here at $98,000. And then if you start to take out those levels, of course, there is going to be a lot of pent up liquidity over here as well, which means you could drop as low as the mid-range over here, which would be $90,000. Don't be surprised if you see a scam wick or two dropping below into 89K or so. But ultimately, those would be the two areas of interest. Area of interest number one, area of interest number two. And that is, of course, pending how this candle closes. If it closes like this or worse, well, yes, then you're going to be dropping a lot lower over there, right? Not only that, but you'll be breaking this trend line, which is pretty much held for this entire move towards the upside. And this is really why I've advocated that you want to be maintaining a cash position and literally just trading the market as it provides you with opportunities each and every single day, because this is very, very hard mode, right? In the beginning of the market cycle, when Bitcoin was trading near 15.5, 16.5, we were loading up with massive positions with extreme confidence. And that was the definition of what I would call easy mode, right? So if you think of this like a game, you have easy mode, medium, and then you have hard mode and extra hard. We are in the period between hard and extra hard. And the way that you can determine that is pretty much based on the timing cycles, right? So you can see as you approach the last phase of the cycle, things become increasingly more difficult with increased volatility spiking both up and down. Now, you can play it in two ways. One way is that you can pretty much just sit on your hands and hold the positions if you believe that you're holding very, very strong fundamental positions. Things like Bitcoin. I can't really put my name on anything beyond Bitcoin that's fundamentally strong, but something like Bitcoin, and you establish those positions very, very early. What would I consider early? Well, I would say anywhere under $30,000, right? Anywhere from even maybe a little bit higher, anything from about $35,000 and below, you're probably fine to just continue to hold those positions. But if you're somebody that came into the crypto market cycle a lot later, maybe only joined in the last couple of weeks, months, or even in the last year, well, if that's you, you're probably better off taking a trader's approach to the market. But again, you need to know what you're doing, and you have to consider the risk that you're putting on the table each and every single day. And you're better off looking for trade opportunities. And that's at least the approach that I'm taking, even though I've been in the market since 2017, bought into Bitcoin originally at $3,000. And again, I bought again at the COVID lows around $4,400. And then I bought again at $16,200 after the 15.5 low. Despite that, I've opted for a more trader's approach for the remainder of the market cycle. And this is exactly why, because of this choppy environment and all the uncertainty, right? 30-year treasury yields jumping to 5%, which we haven't seen for quite a long period of time. And that is bringing a lot of fear into the market. So what should you expect from the stock market, right? Well, we spoke about the stock market theoretically coming into that exact zone, which is the super fib level between the 786 and 886 fib level. That's between a price point of 5,880 and 6,000. Now, we said if you can consolidate in this region or hold above it, you pretty much most likely going into all-time highs. What am I looking at in the short term? In the short immediate time frame, I would say the most likely outcome is, given the new fears, you probably just put in a bit of a pullback over there, fill in some of these futures gaps. Remember, there's gaps in the market based on how price action jumped up into the market open on that Monday, and you may come back and fill some of those gaps. That is about 5,724. Put in a high low over there, and then I think that this can start to attempt at higher prices. But the damage that can cause, if that does pull back over here, you could see lower prices for Bitcoin, 3% down over there. I've given the levels for Bitcoin. You're already almost coming very, very close to that level. That's also about 3.8% to hit that $98,000 region, which I think will elicit a little bit of a bounce over there. Okay, so that's your stock market view. We can see the daily exchange volume is turning down, but this is after the first time that you put in both a higher high and a higher low. Now we're looking for the second higher low, which is going to be a good buying opportunity when you see prices come into those low levels. So all in all, that's looking good. You can see the way that volume moved towards the upside over here, and then it started to diminish. And this price action move over the course of the weekend, there it is, was put in on very, very, very low volume relative to what we had previously with this move up over here. And that was indicative that you need to be careful. There could be a little bit of a trap scenario. So trap confirmed. If you do close this candle below yesterday's low, that confirms the bearish engulfing candle. Bearish engulfing candles at extreme highs, which is at, right? Remember, this is at extreme highs or at a range high, is indicative that you are going to be pulling back at least a little bit, right? So you've traded all the way up to the orange line, which is simply our value area high. You got your point of control at the green line, and then you got your value area low coming in over here, which is in alignment with what I've showcased to you over here. If we go back and I just show you on the daily time frame, I said the areas of interest that we're looking at over here is going to be point number 1 coming into that zone, point number 2 coming into that zone. Point number 1 is 98,000. Point number 2 is 90,000. Let's go into this candle over here. What do we have? Well, just around $98,000 is going to be your point of control with the volume. And then your value area low is coming in right around that $90,000 region. You can see this is currently situated at $88,000, right? So those are the daily ranges that you're looking at. If we look at the 3-day time frame, Bitcoin is tagging some liquidity over here. I definitely think it's worthwhile to also quickly see what Ethereum is doing. So let's look at ETH specifically on Binance at the perpetuals. So ETH has taken out a lot of the liquidity. We'll have a look on the high time frame, like the weekly. All right, there we go. Weekly also absolutely smashed straight through this. So reacting a little bit worse than Bitcoin in terms of this pullback level over here. Let's see on the daily. On the daily, you still have a little bit more downside to come into. These are recent longs that have just opened following this flush over here. So you have currently 364 million worth of longs to liquidate if price does move into 2,347 over there. So this is the current picture. First areas of interest on the very short time frame for me personally would be lining the dailies up with the 4-hour to see how does price react when it comes down into the 200 EMA, right? So you can see there is a bit of horizontal support, which is going to be coming in over here. Remember, there is pent up liquidity, which means if you do lose that level, you could be sweeping some of that liquidity. And that's where that $90,000 target comes into play. So again, first area of interest around that 98K region. It has confluence with the daily. It has confluence with the 200 EMA on the 4-hour time frame for Bitcoin. And then when we look at ETH, well, ETH's 200 EMA is coming in over here, 2,125, right? If you can't get back above the top side over here and you lose that level, well, ultimately, probably fully retracing the entire move, that's back down to 1,800, right? We outlined on the daily time frame for ETH previously the importance of, I believe it was, let's just quickly see, I have it over here. There it is. 2019, right? 2019 was going to be an area of interest that we wanted to bid, which was just a little bit below that 200 EMA. So we are going to be looking to trade the market. Remember, a lot of the trades that we've taken most recently have been based around the Monday range, right? So you can see we came into the pink zone over here on the 5-minute time frame. That is theoretically a demand area, but I wouldn't jump into trades too hastily, right? The reason why is we want to see how the stock market reacts given the recent news that came out over the course of the weekend with the downgrade, as well as the rise in the 30-year yields. We also want the Monday range to complete, right? Currently, we have quite a big range, very similar to last week. You can see on ETH, there's your Monday high, there's your Monday low. This is a big, big, big range, which we're going to be able to trade over the course of the weekend. We can actually measure that out. Currently, you can see 6% from top to bottom, and from bottom to top, that's giving you also about almost 7% over there on ETH. Let's have a look at Bitcoin. How big is the Bitcoin range? I mean, this one also looks like a very, very big range, 4.7%. So what we want to do is we want to wait for the Monday range to complete. I actually released a video over the course of the weekend. Go to the Crypto Banter page on Saturday, where you'll see I put that video out explaining the Monday range strategy. And I told you we are going to be trading this over the course of this week. So if you want to follow along, get your accounts ready. We can't take any trades yet. We have to wait for the Monday range to close. And then tomorrow, we'll start to reevaluate to look for those trade opportunities. So the account that I funded over here with $5,000 is the 𝗪𝗏𝗏 account. And the reason why is we're going to be going against David Tech's bots. David Tech is the latest school that we've just added into the crypto school catalog over here. And he has specific bots that we're going to be trading against. So we're going to see if we can beat the bots, and we're going to use this account to do it. And we're going to use the Monday range strategy as our plan of action. So if you do want to join in with that, there's a link in the description below. Remember, 𝗪𝗏𝗏 has absolutely zero KYC, right? No VPN required, no KYC required. You can use the link in the description below, get your sign-up bonus, and then simultaneously, that link will get you into Whale School, which we start in a couple of hours' time, right? 4 hours' time, we begin with Whale School. Use the link in the description below. Sign up to 𝗪𝗏𝗏𝗏, then sign up to Whale School. This is where we're going to look for those Monday range trading strategies. And I told you on the weekend video, I'm going to give you the final 2 pieces of the puzzle in terms of how you can trade this Monday range strategy. So for any of you that want that, a link is in the description below. All right, let's quickly have a look at BTC and ETH in terms of the aggregate funding rates and the open interest. Of course, this move down has dropped the open interest significantly, flushing out the majority of the long traders, which were there pretty much over the course of the weekend. So if you look at this right now, well, we haven't seen the funding go negative for quite some time, right? The last time we had prolonged periods of negative funding on ETH, you actually formed that 1,800 range, right? Which drove price all the way up. You can see the open interest was completely flush. Then we built up massive funding, sent price towards the upside, had a beautiful move over there. And now you're going through that same period again. So what you should be looking for is a low time frame range to form, right? So as the funding oscillates between positive and negative over here, just watch for a range to form on ETH. It probably forms, I would say, best guess is going to be around 2,000 to 2,300, somewhere within that zone. You're probably going to have the opportunity to buy the high low in the daily time frame. And if there truly is a rotation from BTC and a breakdown in Bitcoin dominance in a more sustained fashion with an increase in the daily exchange volume, I think ETH becomes a very, very sensible play that you can look at in the following weeks and months to come if Bitcoin is actually going to put in all-time highs, right? Which at least the momentum oscillators suggest that there is opportunity for that to still take place, right? So that's what we're looking at over there. Let's quickly go to BTC USDT on Binance Futures over here and see what that one looks like. So Bitcoin hasn't actually put in the negative funding yet. Very, very similar picture over here. When you focus on that funding, I'm looking on the hourly time frame. You can, of course, do this on multiple time frames. But if you have a look at that, look at the negative funding that formed throughout here. That created your Bitcoin trading range, where Bitcoin was forming a base around 93,000, and that drove price up to the current levels that we're at, right? So same thing over here. You're waiting for a bit more of a reset. Let some of that funding flip negative, flush out some of these longs, see where the next area of interest is formed in terms of a range, and then that's where you're going to find your best opportunities. I would say that your job as somebody who has interest in the market, as a trader, investor, whatever it is that you are, is to first protect your downside and not lose money. That's really your job, right? At this point in the market cycle, again, I do want to remind you, we're at least 70% of the way through the cycle. That's your best case scenario, meaning that you have 30% left where you can see prices grind higher. Your first job is now to not lose money. Don't give up all the gains that you've made over this crypto cycle. And then your second job is, when the stars align and there's great opportunity, you can pile on and paste on a little bit of risk on the table over there, getting some upside moves, right? So one of the best ways that I think you can personally do this, and the simple reason is because I've been there before. I was once also a newbie trader that didn't really understand that much about markets. You have a tendency to want to unload the full clip, right? You highlight an area of interest, and you have a tendency where you just want to go 100% in when you have a trade idea. Now, this is what I try and address in Whale School, right? And one of the ways that you can do this, or at least solve some of this problem, is called scaling into trades, right? Which we've done very, very successfully over here. This exercises patience. We've been using the Pinex grid bots over here. So if you look at that over there, you can copy any of these bots. Everything is linked in the description below. I keep getting asked in schools and in Whale Room about the bots, guys. Remember, they are attached in the YouTube videos. You can always go over here if you want to actually copy those bots, right? So we're up nicely on WIF. We're up nicely on Pepe. We also up nicely on the ETH trade over here, 51%. And now we need to make a decision. You know, do you close all of these positions? Are we going in for a deeper pullback, or do we leave them open? I think we're going to wait for the daily close, as I've suggested. I think that's really what we need to see if it is going to be a true bearish engulfing candle, and then we'll reassess tomorrow. Either way, even if it was a bearish engulfing candle, probably you still put in another little bit of a spike, which will set in on the low time frames, a lower high, and then we can determine, do we close all of these trades out that we've taken on Pinex? For those of you that are not with Pinex, remember the link is below over here. This is, I would say, the best grid trading platform that's out there, right? So it allows you to set parameters over here, or areas of interest, as opposed to fully unloading the entire clip in one trade. You can exercise a little bit of patience by scaling into orders, right? So how do it essentially work is we'd say, you know what, well, we think BTC is going to pull back, you know, all the way back down to, we said between $88,000. There it is. So let's go down here. We believe BTC is going to pull back to $88,000. And, you know, your best case scenario is that it finds support over here at like 98 and bounces. So what you'd do is you'd go and you'd create a bot over here where you scale into the position. And on Pinex, we can go through it more on another day, but essentially it will give you the areas of interest where you say that's your high, $98,000, and your low, $88,000. It's a big $10,000 range. And then price, as it moves into this grid over here, will buy Bitcoin for you. And then you can set your sell levels a little bit higher up. All right, we can have a look at some of the other coins over here on some of the high time frames, like the daily. Let me know in the comments if there is anything specific you want to look at. If so, which coins is it that you want to see? And then we can get into it, right? I guess let's go to Solana, down 7.7%. So, you know, pretty brutal, right? Most of these coins on the daily are going to have done pretty much engulfed the previous day's candle, right? This one wasn't technically a full bearish engulfing because the candle didn't open above yesterday's high, but yeah, giving up a lot of the gains, theoretically coming into the demand zone. So I want to be clear on this pullback that we're experiencing right now. As you watch the show, most of these coins are pulling back into demand zones. The plan of action is always that you buy the demand zones. However, I want to be clear, I'd be a little bit more cautious this time around. And the reason why is because we need to see the way the stock market opens into today's news, right? That's the first thing. Second thing, BTC is putting in that bearish engulfing candle, and that kind of changes things a little bit, right? So if the plan originally was buy the demand zone, but we didn't have a bearish engulfing candle, I would have stuck with that plan. But if you have a bearish engulfing candle and prices are coming into the demand zone, you have to take it as a little bit more bearish than not. And therefore, I want to be a little bit more stingy and aggressive on where my entries are going to be, right? So we can look at 𝗬𝗎 as well, coming down pretty hard over there. Theoretically, this is going to be your demand zone, pretty much coming into those lows. That's your demand zone for 𝗬𝗎 is between $3.30 and $3.60, right? Sonic over here giving up a lot of the gains. Also really, really bad. This is breaking down hard. If this candle closes here like this, you know, this can easily move and sweep all of that liquidity, which means I'll be looking all the way down here, right? Into about 42 cents for Sonic. That's previously rebranded from Phantom to Sonic for those of you that don't know. All right, NIA. Okay. Also, coming into the demand zone as we've shown over here. So I'd be targeting the lower half of that demand zone. We've based the demand zone off of this big inefficient candle over here. And we said that's why don't chase price action pumps, because eventually you're going to retrace those inefficiencies. And that's exactly what's happened, right? The markets don't like to remain inefficient. Inefficiency, also known as a large abnormal candle, candles that are greater in size than their prior candles, right? So you can see over there, that candle is much bigger than all the prior candles. That tells you that there's a fair value gap over there or inefficiency, and therefore price action tends to pull back into those inefficiencies, right? Again, more on this in Wealth School. Just join into Wealth School later on today. If you haven't already, again, the two-step process. Number one, sign up to Blowfin, open an exchange account there. You can use that to copy trade me with the battle of the bots. Number two, take the user ID, and when you put in your email address over here, they'll ask you for that user ID, and then you can join into Wealth School. We start with the Zooms later on today. Okay, Injective, also coming all the way down. Demand zone comes in on the lower part, 970, and the midline area, which is the equilibrium that you're going to be targeting, is about 1037. Let's have a look at Casper, also giving up a lot of the gains over there. I said previously with this chart when we were asked about it, you know, it's kind of a difficult chart to look at the time. I said I would just remain out until there is a pullback. Now, for those of you that are actually getting that pullback, so areas of interest, 0.0968, right? Watch for a little bit of support coming into that area. Hyperliquid, right? We spoke about Hyperliquid coming into a key area high. There is your fair value gap or your inefficiency. You're looking for a pullback at least down into 22, right? $22 over there. Aptos, how's Aptos doing? We had amazing Monday range trades on Aptos. Aptos already deep into the demand zone over here. I'm not that optimistic that it's going to find support. If it starts to take out this candle low, and this is going to be the same thing for pretty much most of the market, this expansive candle that formed on the 8th of May, if you begin to take that candle out, you could be looking at a lot more panic and fear coming into the market and low prices, right? So Aptos, I wouldn't be buying this over here, but theoretically it's in the demand zone. It's also at the range low. What you're most likely to see on something like Aptos is probably something like this, right? You're probably going to see something like that, which will be a bit deeper. Take out all of these players, maybe find support around 270 or something, and then start to bounce out of there. Okay. What else, guys? Let me know in the comments. Cardano, let's quickly see Cardano. This one was also a bit of a weird chart we said previously, and I said I personally wouldn't long it. But if you were desperate for a long, this was the last message I gave on Friday. I said, well, this is your demand zone. So very, very similar to Aptos. Stop loss below that candle over there. Theoretically, you're looking on the low time frame for support. So the way that you do it is you need to zoom in, right? You need to look on a low time frame, and you're looking for structure to shift, right? Which means you need to break the lower low and lower high pattern, which is occurring on the low time frames, right? So in this instance, as of right now, let's just clean that up a bit. As of right now, for something like Cardano over here, you would really need to see it take out this level. Until it does that, you can't get long, right? So you need to see something like this, break the structure, create a high, throw back, create a high low. Then that becomes your entry over there. Stop loss goes over there, and you can trade it up, right? What's most likely to happen is the trend just continues, right? And then you break through that level. So just be cognizant and aware of what could happen, right? Always ask yourself, what is the downside risk, right? What is the, how much money do you stand to lose if you take a particular position? That's what we call risk management. All right, let's see what else have we got over here. Let's see, meme coins getting smashed. So with also almost a bearish engulfing candle over there. What are some of the other big ones that we had? Let's see, Pepe very, very quickly. Also rejecting from a clear level, but coming into theoretically range high support. This is the previous range. You know, your deep demand zone, which you highlighted with some of the prior charts, is going to be this area over here, right? So this is your big fair value gap into that zone over there. I would target the low half if things get really ugly. I mean, if you engulf yesterday's candle over here, it's almost inevitably going to drop down to 885. Okay, 885. That's why we took a lot of the profits on the Pinex spots just the other day, because, of course, price is moving a lot. We want to take profits along the way there. Be very, very, very careful, right? Okay, what else? What else? Let me know in the comments, guys. Sure, we can look at Celestia. I think it is TIA, right? That's Celestia, yes. Okay, let's go to this one over here. Okay, let's clean up some of this charts. Where is our pains over here? Let's just clean all of this up. All right, it's been a while. It's been a while since we've looked at this one. Okay, daily time frame. I mean, this is not really a great looking chart. You know, it had its move up. It's pretty much just straight down. If for some reason you believe this is fundamentally amazing project and super, super strong, again, you have two options. One, you can wait for the structure to shift in the form of high highs and high lows, or you can just purchase it all the way at the bottom of the range lows. Personally, I prefer to buy things into strength. So, you know, if it starts to take out this low, you have to stop out of the position, because what are you doing then? You're going down to new lows. And I'm not here to pick on this particular coin, because a lot of them look like this. And I just want to be clear. When I say this, it looks like this, right? What is this? What is this? Who can let me know in the comments, what is this that you see over here? The first thing that you see, when you see that, what do you see? What is this called? Okay, I know there's a bit of a lag on the comments. I'm going to wait for some of them to come through. Let's just quickly do a quick lesson on this, because this is one of the most important things that you can notice in charts. Okay, you guys say downtrend. Yes, downtrend, bear flag, maybe, but not specifically. There we go, descending triangle, right? That's what it is. This is a descending triangle. And when you see a descending triangle, now this descending triangle measured move would probably send us to 0. So it's not always that it's going to work out, but it's just something that you want to notice, right? Because that's the measured move. So I said, we'll send it to 0. It's probably not going to happen, but it's something noteworthy to be aware of, which is pretty much just a series of equal lows. There it is, equal lows, but lower highs and lower highs and lower highs, right? So you need to be careful. You want that trend to break. So again, I'm not suggesting that this is going to meet the measured move, which ultimately would send this to 0. Probably won't. But what it may do is something like that, right? And then break back inside. So you might get one more trap scenario. So be aware of these things on the high time frames like the dailies, right? Okay. Again, I want to be clear before some of you go and snip that. Saying that Kyle said Celestia is going to -0. I didn't say that. I just said that this is a descending triangle. Okay, guys, let's continue. Let's continue. What else? What else do we have? Let me know in the comments. I think we've covered a lot of them, most of them. Let's see. Okay, I've covered Solana. We did that already. I'm just scrolling through the list quickly. Chainlink, sure, we can have a look at Chainlink. Let's go to Chainlink. Okay. Link, the Link Marines. Look, it was cool to be a Link Marine in 2020. Now it's not so cool to be a Link Marine. Link is also just now a tradable coin, just like the rest. So also a very messy chart. I wonder if I should just clean this thing up. So we actually hit our targets. I had alarms set over here, but I see they haven't cleared yet. So let's just quickly remove those. There was our alarms from the previous trades that we took into those highs over there. If I look at Link now, you know, I just view it as very much range bound. Look, it does have that high-low structure, but I think the chances are more likely that this is range bound, because that's always the tricky thing, right? Are you ranging or trending? This is more likely to be ranging than trending. If it is trending, yes, you should put in a high-low over here. Take out these highs if you can hold above the pink box at 20, expansion higher, right? But I think the most likely outcome is that this is just ranging, and therefore you're probably going to view this over time, come back into the range lows. So don't get too, you know, caught up in holding positions long term. We should look at it on a low time frame, because I'm not sure which time frame you specifically are interested in. But I think the confirmation that it's going to go down to the range lows is going to be if you do start to break that trend line, right? And your range low is coming in at 880. So if you do start to take out this trend line over here, chances are you're going to revert all the way back down. Okay, another thing I just quickly wanted to bring into view, let me get this chart over here, and it's the ETH chart, right? ETH BTC specifically. Because we have to look to ETH BTC, because if Ethereum is in a position of strength, it makes for a much easier altcoin market, right? Altcoins generally are going to move the same or more than ETH, right? So what you're looking at over here is the false breakout of this trend line. Now, this isn't the ultimate trend line, but it's the more recent one that's held since June, right? June 2024. You can see that was the downtrend over there, a little bit of a false breakout. What's more important for me is to anchor from the start of this move over here, a fib. So we anchored it from the start of the move to the high of the move. And now what we want to do is we want to see how it reacts coming into these key levels, the 50% level and the golden pocket. So if it can form a higher low over here, you know, that starts to look pretty good. Then you can suggest that ETH is possibly still going to outperform BTC. You had the first big move up, taking out the previous lower highs. So that's your break of structure for the first time with a higher low, right? That's what we want to see. We want to see that higher low form over here. And then you have the possibility for a new trend to begin where ETH can start to outperform BTC. And if that is the case, we expect the breakdown in Bitcoin dominance, and then things start to look really, really good. All right, so we've covered quite a lot over here. For those of you that do want more, you want to take your trading to the next level, remember, whale rooms where it's at. This is where we drop all of the information. Traders absolutely killing it over there. So you can see someone asked about Link. Well, we got a 236% trade over there. Some really, really, really good trades in the server. We have Farouk, Josh, Chris, myself, and Gaurav, right? So we got a couple of pro traders, and we've just released a whole lot of very, very valuable information in the form of educational content. Thanks so much to Farouk, one of our coaches over there, teaching you how to use XO charts to pretty much sculpt to perfection, right? And he actually told me just a couple of days ago that ETH was going to be going down pretty much to that exact level, right? He said 2,330 and it went to 2,328, right? All of that is in the Discord. So that's it from me, folks. Thank you so much for watching. I'll see you all on the next one. I hope to see most of you in Whale School later. One more thing before you leave with Whale School, remember you will be getting as well a Bitfunded account, right? So for any of you completed, I'll personally be buying your $15,000 Bitfunded account. Use the link in the description below, and I'll see you on the next one. Have a good day, and cheers for now.